Hello and welcome to the Quality Investor. Today we're going to do a quick stock analysis of Fortinet, ticker symbol FTNT, a cybersecurity company and member of the S&P 500 as well as the NASDAQ 100. Their current share price is at $59.39, so we are going to determine if they are undervalued at that price as of today. Fortinet's main revenue driver is their product sales of their security and networking products, and they also derive revenue from the subscription services that they sell, which is FortiGuard and FortiCloud, and these services provide customers with access to Fortinet's latest security intelligence and management tools, as well as the support and maintenance of these services that Fortinet offers on top of the products that they sell. One very attractive feature of Fortinet is that they are a market leader in their industry, having 28.2% of the revenue market share, just ahead of Palo Alto Networks and way ahead of Cisco and Check Point. A quick glance at their total addressable market, they project that market to grow to $102 billion by 2027. So there's a lot of room for future growth for Fortinet to earn even better returns than what they have in the last 10 years. And finally, one of my most attractive features of Fortinet is they have increased the number of billings over $1 million by a 49% compound annual growth rate since 2019. They currently have 546 deals over $1 million, averaging $1.3 million per deal. So in my view, that past and future potential growth is an exciting prospect for Fortinet, so let's see how the numbers stack up. They're currently trading at a PE of 44.7, with a forward PE based on my calculations of 40.5. The PE is well below their 5 and 10-year average. Their gross margin percent sits at 76%, which is excellent in my view, right in between their 5 and 10-year average. Their operating margin at 23.5%, well above their 5 and 10-year averages, suggesting that they're growing their economic moat, and they have a return on invested capital of an incredible 73.13%. That's like Apple numbers here. And that is well above their 5 and 10-year average, and the return on capital employed is at 55.29%, also well above their 5 and 10-year averages. They do not, however, pay a dividend. Looking over at their stock chart in the last 10 years here, they have an astonishing 1,303% growth in the last 10 years, coming out to 30.23% annualized return over that period. And you can just see, if we look at their 10-year chart here, that is just astonishing growth over the last 10 years. Let's hope that kind of growth can continue in the future. All right, let's get the nitty gritty, the growth rates of my projections. All right, so Fortinet, I'm projecting a fiscal year 2023 revenue of 20% growth, a net income margin of just under 20%, and earnings per share growth of 21.3% in this to finish out this fiscal year. That brings us down to my projections for the next 10 years. As you can see here, I filled them out years 2 through 6. For revenue, I have a 10% compound annual growth rate over the next 10 years, a 11.67% compound annual growth rate for net income, and a 12.7% growth rate for earnings per share. After taking a net income multiplier of 95%, which is based on how much the net income grows relative to the earnings per share here, and I base that off of my 1, 3, 5, 10-year projections, historical growth here. Excuse me. And a free cash flow conversion of $1.60, meaning they take $1.60 of every dollar of net income they earn and turn it into free cash flow. So that gives us a free cash flow growth rate of 11%. Now, these numbers are partially derived from analyst expectations as well as Fortinet's own guidance, and I also chopped off a few percentage points from each of these numbers, so they're very conservative compared to what the analysts on Wall Street are projecting. And you can see that based on the historical growth rates, they are certainly far more conservative. So let's go ahead and plug these numbers in to my discounted cash flow model and see what we get. All right, so I plug in my free cash flow numbers here, and you can see my projected year-over-year cash flow growth coming out to about, like I said, 11%. And my free cash flow margin by year 10 comes up to about 35%, which is slight growth over what they are now at 32% free cash flow margin. So fairly reasonable in my opinion. That discounted back then at 8% with a perpetual growth rate for our exit value of 3% gives us an intrinsic value for Fortinet of $59.4 billion. And once we deduct out their total shares outstanding, that brings us to a discounted cash flow share price of $74.66. Moving over to our exit multiples model, we can see I've chosen quite a few companies here for our exit multiples. CrowdStrike Holdings, Block, Cloudflare, Autodesk, Palantir Technologies, Snowflake, Palo Alto Networks, and VMware. And currently Fortinet has a PE ratio of 44.6, and only 3 of these companies actually are profitable and currently have a reasonable PE. And the average there of these 3 is 102.5, which obviously is quite high. So instead of the average, we're taking the median PE of 52.59. That gives us an exit multiples price of $69.95. Okay, now that we've gone through our valuation models that we're using here in detail, how does that affect our buy price? All right, so discounted cash flow is at $74.66. And our exit multiple is at $69.95. They don't pay a dividend, so we're not including that. And we're also not including grant valuation, since that is a lot more applicable to a slow growth company. So what does that do for us? Well, that brings us to a valuation average of $73.01, potential upside of 22%. And with a margin of safety of 20%, that gives us an acceptable buy price of $58.41, slightly below their $59.39 current share price. So the recommendation here at a 20% margin of safety is to wait for that price to come down a little bit. However, if we look at it with a 10% margin of safety, that gives us an acceptable buy price of $65.71 and a buy recommendation. For me personally, I would actually prefer a margin of safety in the 20% range, precisely because they're in an industry that is very susceptible to disruption, and cybersecurity is by no means certain. So I think if we wanted to hold on to this stock for at least 10 years, which is our desire here at the Quality Investor, then at least a 20% margin of safety would be my preference. So this is something I would wait on for a little bit until we see at least what their next earnings are in Q3 and see what happens then with their share price. Well, before we depart today, I do want to remind you that this is not financial advice, and I currently do not own any stake in Fortinet. With that, thank you for watching today's video. And what do you think? Is this a fair valuation of Fortinet? Let me know by commenting below. And if you haven't done so already, please hit that like button and subscribe to this channel. It really helps us out here. And also hit that notification bell so you can know when I post more great videos doing stock analysis just like this. Thank you again, and happy investing.